Hello and welcome to TA for Traders. It's Friday the 19th of May. I'm Nigel Croft. In this short video we'll be looking at the Swissie, so the foreign currency cross between the US dollar and the Swiss franc. What we'll see is that a couple of weeks ago it looked very good technically and looked like it was going to move higher. However, it's cracked down now. If anything, it's slightly oversold, so we should see a rally in the short term, but in the medium term further consolidation should be expected as we slip back to support. And this is the daily on the Swissie. You can see I've left this trend line in place that I put a few weeks ago, and it's still a factor on the market to the downside. We did go above it slightly in the second week of May, but we've now come back down below it. The decline that we've had over the last week has taken us back below the moving averages. However, the 50, the blue line, and the 20, the yellow line, weren't moving upwards. They were downward moving, so weren't expected to give any support. However, the 200-day was moving up and really should have given some support, as it has done previously. As you can see here at the end of January and here at the end of March, you would have expected some consolidation, but it didn't happen. We've gone back lower. You can see that we're coming back now to test this key support level from the 7th of November and then the supports from September. However, the market is oversold. The RSI is down at 33. It is a sign of very negative momentum, but one would expect some consolidation. The MACD are also indicative of negative momentum. On the weekly chart, although it's close to being an engulfing candle picture, it isn't, because the previous candle was higher than this the present candle, but it is slight concern. Some technical analysts will say it's an engulfing because it's the body of the candle does encompass the full body of the previous candle, and certainly it was an engulfing picture from the candle from 2 weeks ago. So some technical analysts will be saying that as a negative. However, as you can see on this weekly, again, the RSI indicating negative momentum, starting to maybe look slightly oversold, and the MACD as well showing negative momentum. But from this chart, you can see the supports that are coming in, and you can see the picture on this Swissie. Support at 96.765, 96. 95.20. There's a lot of support that it's falling back into, and really one would expect this support to hold, maybe for the market to range trade between the support here at 96.75 up to parity, range trade in that, and then we'll get a clear idea down the road of where any break will come. If you look at the 4-hour chart, you can really see that the market did get oversold. On the 4-hour, we are actually starting to see some recovery. In fact, because we're near a low in today, and yet the RSI is higher than the previous lows, some would say that's a start of a non-confirmation, and is a start of a base building period. So let's wait and see. And the MACD as well are actually starting to flash by on this 4-hour chart. So be aware of that. And that's really one of the main reasons that I do expect some short-term upward move from the support levels. And on the support resistance, 20-day, 50-day, both moving downwards, 99.40, 99.75. with support 96.81 and 96.40. So that's been TA for Traders looking at the Swissie on Friday 19th of May. If you're new to TA for Traders and you found this video of interest, please do subscribe to my YouTube channel. Please be aware these videos are for educational purposes only and are my opinions, and in no way are they meant as an investment recommendation. Thank you.